Hello traders, this is Rich from Tradesight. So I wanted to take a look at the current construction of the GDX. The GDX is a widely traded ETF that represents an aggregate of the precious metal miners. And we've just recently punched down to new lows, but something very interesting is happening here. We were attempting to break down to new lows, we're also getting a seeker exhaustion warning here. So we have our 1 through 9 setup phase and then our 1 through 13 countdown phase. The green numbers on the chart represent the setup phase, and then the trending portion of the study is represented here and labeled with the red numbers. So you can see that we got our 13 exhaustion just one day before the actual bottom, the actual lowest close on the chart right now. In so doing, we did hold above the stop loss level, the magenta colored line here. So we do have an exhaustion warning in place, and it's just about to turn into a full-on reversal if we can close above the 10 EMA. But in addition to the seeker setup that's present in that exhaustion warning that is on the chart right now, there's another feature here, which is something that we talked about at the end of last week as it was actually in the process of forming, and that's the trend termination setup, which is a 4-bar pattern that's actually right in here. So let me change the chart here and let me talk about that trend termination setup. All right, so here's a more detailed chart of the GDX. This is drilled down in the same time frame just to show you a little bit more detail of the price action. Now the trend termination pattern is a 4-bar setup, and it's got pretty strict requirements. What you have to do is you have to have the first candle of the formation has to be in a buy side, and a buying opportunity here has to be to the downside. So we've got one down candle, then we've got a subsequent candle right behind it that's also down. This one's labeled number 2. This is the second candle in the pattern. Now the third candle in the formation has to make a new low relative to number 2, and preferably also number 1. And after it makes a new low, it has to close positively on the day. This is kind of a change-up candle. This is where some people go fishing for longs, and some shorts wind up covering. But it's not the completion of the pattern, and it's not usually a key reversal day. The most important candle in the pattern then is this fourth candle, which is a resumption of the downtrend that has to close down on the day, and it's better when it closes at a new low in the pattern. So we definitely have all those conditions present here. We've got one down day, a second down day, then on candle 3 we make a new low but close up on the day, and then the fourth candle, which is the signal candle, closes down on the day, and that's all present here. After that, the expectation is that candle number 4, okay, will be the low close of the move, and in fact this whole candle will be covered up to the upside when the chart reverses on the subsequent day, and that certainly happened here. We actually doubled the range on the day, and this is a very, very strong candle. So taking the combination, we've got the 13 exhaustion in place from the seeker. Back to the seeker chart here. So we've got a 13 exhaustion in place in the seeker. We also have the trend termination formation in place. Now you know how to look for it. And so we've, any particular indicator on its own is noteworthy, but when you have two very powerful indicators that coincide like this at the same spot on a chart, especially after a nice extended move to the downside here, that can be a very powerful turning point. So we're going to continue to play the GDX on the long side here and look for reversal, breakouts, and continuations in the near term. As always, thanks for listening. This has been Rich for Tradesight.